Are billionaires feeling the pressure? We'll learn the behaviors of the world's wealthy. Plus, more than a third of directors of public companies feel that one of their fellow board members should be replaced. We'll find out why. This is 7-Day Yield.
Welcome to 7-Day Yield. I'm Mitch Rochelle.
And I'm Lydia Moorish, and here's what's trending. According to the new Billionaire report released by UBS and PwC, it appears we are about to witness the greatest transfer of wealth in human history. The report estimates that 460 billionaires will transfer a staggering $2.1 trillion to the next generation over the next 20 years. That's the equivalent of entire GDP of India in 2015. As most of Asia's billionaires are first generation, this will be the first ever major intergenerational wealth transfer experienced by the younger Asian economies.
Directors of public companies are saying someone on their board isn't measuring up. A recent study by the PwC Governance Insight Center reports that 35% of directors say someone on their board should be replaced. The most common reasons identified are lack of preparation for meetings and the director not having the right relevant experience.
Well, holiday budgets are getting even bigger this year. This holiday season, shoppers will spend an average of $1,100. That's up 10% more from last year. And surprisingly, households with income levels lower than $50,000 will increase their spending levels even more.
This is an amazing nugget for you. A new billionaire is created every 3 days in Asia. There may be hope for the two of us, Lydia. Anyway, a recent study by PwC and UBS looks at the world's wealthiest people. 7-Day Yield contributor Julian Korb explored the study's findings with UBS's John Mathews. Take a listen.
So John, UBS and PwC released together the 2016 edition of our Billionaire report. This year it's called Are Billionaire Feeling the Pressure? So, are they?
Yes, billionaires are feeling pressure. For the first time over the last 8 years, we see the rise in wealth of billionaires has actually slowed. Even though the number of billionaires has increased, 210 in the markets that we study, the overall wealth has actually declined from 5.4 trillion down to 5.1 trillion. So it looks like it may be pausing. There's a number of reasons. Number one, we're starting to get into intergenerational wealth transfer. That's a phenomenon that we're starting to see now in this billionaire population. Also, asset prices have deflated in some areas as well, but it looks like it has certainly been a pause.
So anything surprised you in that report?
Yeah, Julian, you know, it's interesting. I mentioned how the U.S. billionaire population growth has slowed. But one interesting, I think, tidbit here is that the American dream is still alive and going well, because now for the first time in 10 years, over half of the billionaires in the U.S. are self-made entrepreneurs. You know, as opposed to coming from legacy family wealth, it's now you're seeing the self-made people or billionaires starting to grow faster at a faster pace. That trend will continue, and it'll be interesting to watch that as well.
Very good. In our report, we mentioned there's a creation of one new billionaire almost every 3 days in Asia. I thought that was a fascinating statistic.
All right, just think about that. One billionaire created every 3 days. I have to say it twice sometimes just to think about it. You know, every 3 days a new billionaire is being created in Asia. Now that's driven primarily in China because of governmental and political reforms going on in that part of the world. New markets continue to be opened up. You're going to continue to see that trend grow. Entrepreneurial, self-made, younger billionaires being created.
I see. So we mentioned Asia and the US. I've noticed that in Europe, while Europe might not be the best at creating new wealth, it seems that it was the best at protecting it.
Right, yes. They do a really good job in terms of making sure that wealth stays in the families and gets passed down to generation 2, 3, and 4. A really interesting statistic is over 33% of the world's billionaires today are over 70 years old. In the US, that number is over half. So just imagine that. They're getting into their 70s, they're starting about generational transfers, and it'll have a big impact. PricewaterhouseCoopers and UBS predict that to be over $2.1 trillion or more over the next 20 years and accelerating.
And any major mega trends impacted the wealth transfer, the creation of new wealth, whether it's urbanization or new regulations or what have you?
Right, well, globalization, we're seeing this, right, taking full hold. I mean, if we were here 15 years ago, I'm not really sure the numbers would look the same, but certainly globalization. In the Asian region of the world, you have population shifts and population growth, which certainly has created more demand, and I think that will continue, at least I think in the near future. And also government regulation. I think the more developed countries of the world are seeing more and more heavy regulation, which can impact a number of things, right? The growth of business and certainly the wealth transfer that we discussed earlier in our conversation.
Any big lessons learned from the old legacies to the new generation?
Yeah, it's proper planning, and what we found is that the families that keep hold of their core business, they many times they branch out in a number of different businesses, but if you stay true to your core and keep that core business or that core legacy going forward, you typically hold on to your wealth longer and getting the family involved in that business. And I think those will be some of the lessons that will be taken away from our U.S. counterparts and the Asian families as well. But we'll see. That's what's so interesting about our joint report is we learn something new and we identify trends.
Gary, one of our favorite guests, thank you for being back
Thanks,
here.
Thank you.
We mentioned in the opening that we're about to see the greatest transfer of wealth in human history. How should billionaires be thinking about asset diversification?
Billionaires are not immune to what's happening across all investors. Clearly, there's been a very significant flow from active investing to passive investing. You're seeing that even with the large-scale, billionaires. Diversification away from equities and fixed income. Big focus, obviously, on private equity, real estate, infrastructure. So they're really looking at how they're diversifying their assets. And some of them are even beyond the more traditional investments. They obviously look at the businesses that they're into in a very different way than those at the lower levels of wealth, if you will.
Is there an industry focus or is there a sector where this wealth is coming from? Is it tech or is it?
Look, I think that technology certainly is driving quite a bit of the growth and the development of billionaires, without question. Not only a phenomenon in the US, and you see this happening all the time, but if you think about what's happening in Asia and China, a lot of that is driven obviously from what's happening in the tech sector.
And we talked earlier, going back to the intergenerational wealth transfer, you look at Europe as sort of being the old money, US is new money, and now Asia, it's the really new money.
New money, exactly.
How can these people be thinking about wealth preservation?
I mean, the intergenerational transfer of wealth is critical as you kind of look at the wealth management industry, right? Even when you have intergenerational shift in the US, you're talking about 1 or 2 generations. So focusing now on what the next generation really needs, how they want to work with advisors, how they've established family offices is very different than what we were dealing with in the previous generation and certainly what they're dealing with over in Europe. Asia is a completely different phenomenon. You're talking about creation, and if you look at China, we're talking about over the last several years. You're not talking about a generation, you're talking about a quarter of a generation. Right. So this was a very exciting study that we've done with UBS. The opportunity for us to be working with them as an organization to get into the market is really exciting.
Mm-hmm. So there's been great insights.
Yeah, we're very excited about the new version, which I think is launching now in the U.S. and in Europe.
Great.
So thanks, guys.
Thank you. After the break, we'll be speaking live with our leader of the Governance Insight Center. Stay with us.
Plane tickets? Check. New messenger bag? Check. New sunglasses? Check. What else? Oh, I almost forgot. Mom.
Welcome back to 7-Day Yield. The spotlight on public companies' boards is getting even brighter, with everything from activist shareholders to corporate scandals. Our next guest, Paula Loop, who's the leader of PwC's Governance Insight Center, is here in Studio C with us to share the findings of the 2016 Annual Corporate Director Survey. Paula, welcome to 7-Day Yield.
Thank you for having me.
So I thought it was really interesting. I read a statistic that about a quarter of male directors don't really feel that board diversity enhances company performance.
You're absolutely right. So we did ask both men and women directors, female and male directors, what they thought the impact either was on company performance or even on board effectiveness. And as you can imagine, the women unanimously thought it was a positive representation to have gender diversity on the board. And men were really around the quarter to 1/3 representation on both of those issues. So a little bit of work to do there. They're welcoming women into the boardroom, but they're not entirely convinced why they're there, I guess.
As a guy, now I have to speak. I feel very uncomfortable. I mentioned at the top of the show that 35% of directors feel that one of their fellow directors sort of isn't cutting it. And I think we were talking in the green room, you said this is a multi-year observation. So why is that happening, and what are governance committees of boards doing about it?
So first of all, I think the reason it still continues to be as high as it is the bar is continuing to raise on performance in the boardroom. With activists and all the other pressures from the media and so forth, investors are really pushing directors to really, raise the bar. So that, I think, is the issue there. The other question that we asked in the survey is, what about board assessments? What about the impact of those? And about 51% of directors that we interviewed said that when they do board assessments, they actually don't make any changes. So that might be one of the reasons why there's really not a connection between performance of a director and this assessment process. So there's a little bit of a disconnect there. I agree.
We've seen a couple of consecutive quarters, more than just a couple, of corporate earnings starting to wane a little bit. Has that created a lot of pressure or friction between independent directors and management? Are we seeing that?
Well, see, now you're contributing to the whole short-termism thing, right? You're looking for quarterly results. I think it is going to contribute to the pressure. It absolutely is. And it does contribute to the whole issue of, do you focus on short-term goals, or are you trying to really deliver long-term value? And it gets back to, can we get some performance momentum going? Or do we have a 2 or 3 year plan that we're really trying to work through?
Great. Well, thank you so much for those insights.
Thank you for having me.
Thanks, Paula. On our next episode, we're looking at how big institutions operate globally, and we'll get some money advice from the rich and famous.
Thanks for watching. To catch up on previous episodes, be sure to check out our PwC YouTube page. Plus, you can follow us on the Twitter handle below. We'll see you next time on 7-Day Yield.